Welcome to Everything Currency and good morning. I just want to talk about something that I think a lot of people are confused by, something that I feel like a lot of people are participating in, and it's not really good for Bitcoin. So, like futures contracts, paper contracts, CME, Bakkt, none of that stuff is good for Bitcoin. Let me tell you why. And I'm gonna make it very, 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 very simple. And I'll explain why even the charts are looking a little bit different this halving than they have been looking in previous halvings. And that's because we have and just hear me out and tell me if you agree. So with Bitcoin, the big thing about it is that there's this hard cap of 21 million. So, in theory, Satoshi Nakamoto, the whole group, David Klein, he decided, you know what? I want this to be like gold. Now, how that was, and back in the day, there was the gold rush. It was all, there was, a bunch of gold to be made, a bunch of people got rich, a bunch of families are rich forever. Then, as a lot of the gold was mined, it got more and more rare. So it got harder and harder to find gold. People couldn't find it in the rivers no more. They had to start going deep sea. They had to start digging in deeper into the mountains and stuff like that. So it got rare and rarer, and as you see, the price goes up and up and up. So with Bitcoin, the idea was for, the mining. That's why it's called mining. But on the computers with the mining, it's supposed to break in half every 4 years. So every 4 years, people are supposed to find less and less digital gold. And the CME futures, which is all run by all those institutional people in Wall Street and lobbyists and all those fools, they decided, you know what, we want to tame Bitcoin because they're calling this the biggest wealth transfer in the world, and we're the wealthy ones, so that means they're trying to transfer the wealth from us to them. So they're like, we can't let that happen. The dollar has to remain number one. We can't even have Bitcoin be number two. You know what I'm saying? So basically what they did is they created futures. Now, what makes Bitcoin rare is the hard cap of the coins. So when you throw more money into that 21 million pot, if you have $21 million in there, that means every Bitcoin would be worth $1. So if you have 21 Bitcoin, everybody throws $21 million in there, it's worth $1. Now, what CME Futures does is it adds paper Bitcoin, and what that means is we're gonna trade fake Bitcoin, basically. We're gonna trade the price of Bitcoin. So we'll go off the price of whatever price discovery tool they use. We'll go off of the price of XBT, right? We'll go off the price of Bitcoin. We'll create XBT or one of those, right? And then people will trade, and this is where leverage trading comes in. So you never really have to buy the Bitcoin in order to trade it. You know what I mean? So they're using cash. They're using the dollar, which is what they want to keep dominant. So, if there was 21 million people who wanted to trade and they had $1, and they throw it into Bitcoin, but they throw it into futures, you see the price of each Bitcoin should be $2 now. But no, it's in futures, it's in fake Bitcoin, so the price of Bitcoin doesn't move. So then Bakkt came out. And the reason why everybody thought Bakkt was a good idea was because, hey, look, now they have to actually buy the Bitcoin. So if they have to actually buy the Bitcoin, when they throw another $21 million in, each Bitcoin should be $2. Are you guys following? I hope you're following I'm trying to do it for easy math. So what happens is they say, nah, we're futures, we don't want to do all that. We're just going to buy our little paper, and then the price doesn't move. Then what happens is Bakkt comes out, and everybody's all hyped about Bakkt because it's supposed to be backed by Bitcoin. what that means is they would actually have to throw that $21 million into the pot and make the price of each Bitcoin $2 and blah, blah, blah. Right? They would have to actually buy it from somebody, and that person would, choose the price. So what this does is the halving that's coming up, it kind of changes things. I'm not trying to spread FUD or anything like that, and this is not financial advice. Now, you can go and do your research. They did the same thing to gold, and you can see that the price of gold still went up pretty nice over the years, but who's to say that the price of gold couldn't have gone up quicker or twice as much or 3 times as much? Like soon as the futures came out, back in 2017 when everything was popping off and everybody thought, oh man, this is crazy. Everybody was making a whole bunch of money. Futures was coming out. That was everything on everybody's list that they were talking about, similar to Bakkt now. That was everything that they were talking about. And then the price dropped. So I'm all over the place with this, but you see where I'm getting at. That inflates the price of Bitcoin. In other words, that means that they're creating more Bitcoin, meaning they don't think Bitcoin has a value anyway. They feel like it doesn't really matter. Like some people who just want to make money, like institutional investors, they want to bet on the price of Bitcoin. They might not even care. They're like, I don't even see Bitcoin anyways. What's the difference between, because they don't get it. They don't know what Bitcoin really is, so they'll trade it. If they really knew what Bitcoin was, then they definitely wouldn't trade futures. But a lot of them, they do, like, the ones who are against Bitcoin, they know what Bitcoin is, and that's why they're trading it this way. Because they basically, if you buy paper Bitcoins, who cares, right? It doesn't go towards that that money doesn't go towards that 21 million. Bakkt came out, said we're going to have physically backed Bitcoin and all this stuff, and that's not what's going to happen. What's actually going to happen is they're going to switch over to paper Bitcoin, which means the same thing as the CME futures, basically. So they're not going to be holding real Bitcoin, which means further inflation of the price. Now, if you remember, everybody was kind of happy a while back. Oh, institutional investors, everyone talks about institutional investors are getting in. Institutional investors are getting in. Yes, they are. But are they getting in to give you their money? No. They're not getting in to make you people who already been here rich. You're going to have to play against them. You know what I mean? They're going to make you play against them. Me, I'm just going to watch what their moves are. As soon as they make a move, I'm hopping right on the coattail. You know what I mean? Not trying to go against these guys with billions of dollars. Just want to ride their coattail and get some money. But as far as Bakkt goes, it's not good for Bitcoin. Leverage trading, stop doing it. It's not good for Bitcoin. Like in the long run, if you're expecting the price to go up in the halving, if you're trying to get more Bitcoin for the price to go up, stop leverage trading. It ain't even legal in the US, so stop. You know what I mean? If you want to go ahead and use that futures BS, go ahead. You know what I'm saying? But if you really, want to see crypto take off and you believe in what crypto stands for, then you would just, either just buy some Bitcoin and hold it or trade Bitcoin. If you really, really believe in crypto, then you would buy Bitcoin and pay for things with it. If you're not doing that, then don't tell me you believe in Bitcoin. If you're just hodling, then you're kind of just in it for the money. Which there's nothing wrong with that, but just admit that to yourself, that you're just in it for the money. If not, go ahead and spend your Bitcoin, buy some more, spend it, buy some more, spend it. Go ahead and spend your Tron or your Litecoin or whatever you're trying to spend, whatever, Hundi X or whatever it is. You gotta use those coins. Don't just wait for other people to pump them. And so Bakkt, futures in general, basically anything that adds, like, back to one contract is one Bitcoin. If they trade, 10 million contracts in a day and they're not actually backing those by real Bitcoin, look, they just created 10 million Bitcoin, guys. Like, that means the halving doesn't mean nothing to them. Like, it doesn't, where's the hype from the halving if they can just inflate Bitcoin? That's all. It's supposed to be, it's not supposed to be like a dollar, put it that way. It's not supposed to just be able to be created out of thin air. is the whole big deal with mining in the first place. So, you know, and now they got futures coming to Ethereum and, you know, my bad, my holder fell. But they got those things coming to Ethereum, and XRP Army wants it to come to XRP. No. You want to keep these things far away from crypto. You want it to belong to the people, not the institutions. You don't want the stock market to own Bitcoin. You know what I mean? Like, yeah, if the government decides to go and buy a whole bunch of Bitcoin, cool. But if they buy all the fucking Bitcoin, then what's the point? So we have to buy the Bitcoin. We have to spread the word. We gotta stop using these leverage platforms if we want the price to do what it always does. With that being said, when the halving comes around, I still think the price is gonna do good, but the sentiment is, for me, it's too high on that. So I think they're gonna play into that. They're gonna play into everybody thinking that they're gonna get rich in the halving, and they're gonna jack everybody, and then we'll see what happens. So yeah, it's about to get crazy, folks. Like, subscribe, turn on post notifications, check out hodlshop.com, and I'll see you